Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. And our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. So last week on the show, we focused on finding a wheel strategy trade, and we put on a short put on SPY. And so this week, we're going to look at a few new tools in the dashboard, namely the Market Intelligence tab and the new Time and Sales tab. And this will help us find a trading opportunity for today. So Matt, if you're ready, do you want to share your screen and go over the wheel trade from last week?
Absolutely. Thanks, Tyler. As we are wont to do on this channel, we come up with a trade using tools on the ORATS dashboard. And the first thing that we do is review the past trades. So last week's show was on the wheel back test. So we identified a strategy in wheel. You could see the YouTube here and the graph of the one that we ultimately picked was, and with a wheel strategy, there are two strategies. So there's the selling of the put, and then there's selling of the call. So this was a 16 DTE, days to expiration put that we sold, and around a 50 delta. And then if that gets exercised, then we're going to sell a 70 delta call against the stock that we get exercised. And if it doesn't, then we're going to continue on our merry way selling the 50 delta puts. So last week, let's see here. Good timing, Barry. Last week we let's see if we get the trade here. Yeah. So we scanned for this trade, sold it at 280. We sent it to our paper trading, and it came through. So there's the 280 cost. So this is our paper trading on the dashboard. And then today we've made about $1 on it, and so yeah, we're doing pretty good. So on the first this is our fourth show. So we've had 3 shows of trades. So the first show we had a successful, made $1 or $2 on the on an earnings trade. The second one, we did a put calendar that did not make money, probably lost like 30 cents. And then this one, it looks like it's up over $1 right now. So we're doing all right. So today we're going to look at the Market Intelligence tab, and we're going to look at the largest trades, see what other people are doing in the market, and see if we might find a strategy that might make sense, maybe a copy strategy of large traders. And when I was a market maker, there were often people in the know. So we're kind of looking for people in the know. So what I like to do is come into our Market Intelligence. I like to look on dollar delta. So right now it's sorted on how many contracts are traded versus the average 20-day volume options for a particular stock. I like to sort an absolute dollar delta just to see what's going on.
And Matt, what is the dollar delta? Can you go over that real quick?
Yeah, thanks for asking. The dollar delta is the price of the contract times the price of the stock. So, it's a good way, actually, kind of a rule of thumb to manage your deltas, because, stocks with higher prices often move more, because the delta is just how much the stock moves for a $1 move in how much the option moves for a $1 move in the stock. So if you have a very low stock price, it's going to be harder from a percentage standpoint. So we do this thing called dollar deltas that normalize the move. So the bigger the price, the more meaningful the delta is, and the contracts times the delta times the stock price.
So by sorting on the dollar delta, you're essentially taking you're finding the most meaningful large trades in the entire market.
Exactly. Right. And so what I see immediately is there's a double. So there's BBWI. So let's take a look at BBWI. This might be a stock that we go look at. So if we look at it there, and then BBWI is also on the unusual volume for all the stocks here. So so it's already traded 5.8 times what it normally does today. So this is a good candidate. So let's do this. Let's look at that trade. The paper was selling, meaning customer was selling the Jan 37.5 strike, which 47 days to expiration for what did they do it for? They sold it for, they're actually losing on it. They sold it for $1.15 and $1.09. But let's look at what their thesis was on that. So let's go over to, first of all, let's go to the trade history. Take a look at this option. So it's going down and down and down. You can see the big trades here. This is the volume right here. So this is 110,000. There's
Can
another.
You scroll down a bit, Matt? Our faces are kind of covering the graph.
Okay. So there, so these are large trades, and you can see what's happening. The stock's going up, but, they're still selling these calls. So it might be kind of a volatility play. So let's look at the trade builder. Let's see if we could get some clues on this. Now, trade builder is nice because it kind of shows where the option is in relation to the stock price, which is right here. So the stock has jumped up and it's really rallied. It's up every day since Thanksgiving. So it had a good turkey day. And so it's up here and they're selling the call now. So that could be a delta, that could be, selling vol. Now, what I'm noticing is here's the next earnings. So one of the nice things about, let me turn on my drawing. So one of the nice things about the trade builder is it shows so there's the stock price, and then it builds this kind of volatility surface based on that. And it also shows the break-even point, so where the stock would have to go for that to lose money. And it shows implied volatility in blue, so that's down here. And it shows historical volatility in kind of magenta, that's up here. But it shows the past earnings. So there was an earnings here. You can see the stock moving down. You can see the implied volatility getting crushed as happens on earnings. But what you also see is the next earnings doesn't happen until after this expires. So this call. So what they're doing is they're selling options intra earnings announcement. So in between. So and they're selling this Jan right here. So they're selling, actually right here. Yeah.
Matt, does that stand out to you because most people tend to sell options after earnings to get the volatility rise and the premium and the volatility?
Yeah. So what I'm seeing here is that if we're going to do some type of a copy trade here, we don't want to be selling anything past earnings because they may know something about next earnings, or so this I'm sensing that the thesis is that the historical volatility until earnings is going to be somewhat low. So so that's what I'm sensing here. And so based on that thesis, we'll have about 80 days. So it's not till February, after February expiration. So we'll have February expiration. So what we might want to do is say, okay, well, let's go check out. First, let's check out the time and sales. So not only do we have an overall market time and sales, but we have a time and sales for just BBWI, which is Bed and Body Works. Used to be L Brands. Yeah, used to be L Brands. So anyway, so these are kind of hard to look at. This is a multiple leg execution that went through, but it was mostly just selling the 37.5 strike. And here's another one, and here's another one, and it looks like they're buying some calls as well. So it looks like call spreads Here is a risk reversal where they sold the call. Here's a short call spread outright. That's much smaller. So that's what we'll be looking for: short call spreads, maybe even a short put spread. Maybe short call spread. It looks like they're lighting up on delta. So what I do is then let's go to the option scanner, and
I want to touch on the time and sales again real quick. So
yeah.
Most people are used to sort of like raw time and sales data, right? What we've done is we've gathered all the raw data, and then instead of just showing it to you raw, we've consolidated it and sort of identified the trades that people are doing based on the time of the order, right? So we get the raw data and then convert it to strategies, right? And then we look at the open interest and the contract size, and we gather all those together and present it to you in this table, where you can filter based on all these different metrics, including theoretical edge and how much profit that trade has made so far. Which is, it's much easier to look at this than just raw time and sales data.
Yeah, and you could sort on all those things that you talked about too. Which is, yeah, I was remiss in not mentioning that, but yeah, this is super useful, and we put it in the same format as the market intelligence, so you could sort on all the things that you want, from time to contracts minus open interest. So that would indicate opening trades. So yeah, there's a lot going on here. So now I'd like to jump over to the option scanner to see what we might do with this. So so we could type in BBWI, and there's a long call spread in there. So let's take that out. Let's do a short put spread and a short call spread. Let's do a short call spread. And let's do a short put spread. All right. And the order that was 44 days, if it's not my recollection serves me. So we could go out to even about 88 days and still be before earnings. 8 days. I'll do the same with this put spread. So now we are scanning for all of the BBWI trades, that meet certain criteria. So one of the things I like to do is let's sort these, and I want to sort. I like our forecast. So these are all option values that we calculate that you could compare to the values in the market. So we have a distribution that I'll show you in a moment. That's an expected return type of a thing based on movement in the stock. We have forecasts based on forecasting historical volatility, long-term historical volatility, and implied volatility, and then earnings moves. So that's that. If you recall the option surface. So that's our forecast, and then we even have a smoothing where we just draw the line through. And 95% of the time, that smoothing is very close to the midpoint. But on a stock like this, that's a little bit. I know this is a little bit wider of a stock. The smoothing is an important valuation to look at, and I'll show you why in a second. And then we have risk return and probability of profit. Those kind of offset each other, so we like to kind of weight them similarly. Does that all make sense, Tyler?
Yeah, the first three values, the D%, F%, and S%, those are all just our percent of the theoretical edge that we calculate for the trade. So we calculate a theoretical price, and then depending on how much higher or lower that theoretical price is than the regular is what gets shown in that percent value. And if you click on it, you can see sort of the more details on those, distribution edge down at the bottom near that payoff analysis. But you can, what Matt's doing is just ranking the table of trades based on those values. And that's the distribution edge right there.
Yeah. So we present the distribution edge. And so this first trade, has a good distribution edge, good forecast edge. The problem I have with it is that it has a really good smooth edge. And what that generally means is that the markets are wide and the mid market doesn't really reflect what, being an ex-market maker, we knew this. We were watching the same movie. You're probably not going to get filled on that because the markets are probably really wide, -80 at -25. So that's a pretty wide market. So what I'm going to do here, Tyler, what I like to do for stocks like this is to do some filters here. So I could set a minimum and maximum so that you can see this is 9%, 3%. So generally, if you're going to get filled, I'll put if it's 4% against me or 4% in my favor, those would be the filters. So I filtered out that top one. And I also want to put I also want to look for open interest. So here's open interest. So a lot of these haven't traded yet. So I'm going to put 1 as my open interest, and you can see all those zeros disappear. And then ask minus bid, if they're too wide, luckily we don't have very many wide ones, nothing over 1% yet. So I'll just put 1% in here. It won't filter anything out yet. So there we go. So I think this is a good scan for trades that we might be able to get filled in pretty readily. So,
yeah, I like that. And if you wanted like a higher probability of profit trade, you can rank that probability of profit higher or even sort on it. Because right now it's just sorting on the ranking, but
yeah, and the ranking is set by these. But yeah, you could sort. You're right, sort on any one of those. But this is how I like to treat it. So now I've got some pretty good looking call spreads, it looks like. So, this one's pretty far out of the money. 2.5, so 62 cents for a 2.5 is pretty good for that far out of the money. So that reward to risk is 1 to 3. So getting 1, risking 3, is if it goes all the way to 42. So this one looks actually pretty good. So I'm going to click on that. You see what it was yesterday. Look at that. This stock has rallied 7% today. So yesterday it was 29 cents. Now it's 62 cents. And we actually break down why that happened. And you could see here in the profit attribution that it went up based on delta and gamma, moving the delta. So that's why we think that we try to make an estimate of why that went up so much. So now we have a smooth edge, not too great, so that we have a decent chance of getting filled, and then the distribution edges, those look pretty decent. So I think this is a decent trade to try. So I'll put it about halfway between the bid and ask, slightly less edge than we have here. And then our paper trading algorithm will see that we've done that, and it has ways to randomize based on probabilities to see if we get filled there. Another thing I want to point out is that we have exit alerts. So I want to know when I've got 15% of edge on this, or if I've lost 15%. And then I might get out. And then I like to put a note to myself that this is a Tradier hub trade. And Tyler, I don't know if you've even seen this, but so these alerts that we get, we're only gonna, sometimes the markets widen out quite a bit, and we have the ability to feed in a percentage. So if it gets too wide, don't alert me. But if it's under this amount, which is about how wide it is now, then it will alert me to that trade. So it gets rid of some false alerts. So you could copy that trade and send it to someone, or you could review it. We're going to be getting 50, and then confirm and send. And so this goes into our working orders, and yeah, we'll be waiting. So looks like the mark 60 cents. We're willing to sell for -57 cents. We could then place that, go down a little bit. And see if we might get filled at 55. Anyway, we'll leave this on. We won't hold up. There it is. It's a fill. Nice. And so we'll watch this for next week. We'll come back, take a look at our call spread in BBWI, along with how we only have 3 days left in our 456, so it's right at the money right now for our wheel strategy. So we'll let you know how that went as well. So that's what I've got. Tyler, anything that I overlooked or missed, or that we want to concentrate on more?
Yeah, and that was we covered quite a few tabs there. So we looked at the market intelligence, which is basically a way to see, and there's other things in the market intelligence as well. There's that unusual volume table, there's an earnings table, a dividends table, and the largest trades. So there's a lot in the market intelligence that you can use to sort of kickstart a trading thesis, right? And that's what you did there. You looked at the largest trades to see, what's going on in the market today, to develop a trading thesis. So the market intelligence is a great kickstarting point for that. And then we jumped over to the analysis for Bath and Body Works, where we looked at the time and sales data for that stock, looked at the trade history, and then went to the option scanner. Anything else, Matt?
Yeah, that was good. I think you bring up a good point. So in the market intelligence, we also have dividends. That's sometimes overlooked, and it looks like some big stocks are in here with a very nice dividend yield. So we color this by dividend yield. So this looks like
your screen's back now. It was gone for a minute there.
Okay. Yeah. So dividend. So we might want to talk about about some dividend yield stocks and about some strategies for that. We put that on our list of things to cover.
Yeah, we'll probably cover that soon. But yeah, these tables are really nice to look at, and then you can jump immediately from these to scan for bullish or bearish trades, and then go straight to the trade builder. That's something that we could touch on a little bit more, Matt, the trade builder. So, we were looking at the volatility surface there, but you can also look at, I'm looking at the 68 and 95% IV range buttons at the top.
Yeah.
I like to look at those, to see a general idea of where, sort of the upper and lower bounds of the stock movement, right? And you can see if your trade is above or below those bounds. And it's just a good, general way to see where the trade lies.
Yeah, good point. You could see that, this particular trade is well within that. So we're selling it. So it's a little bit nerve-wracking to be straight short this, but we have a call spread on. So we're, and it's run quite a bit lately. So yeah, I think that's a decent trade that we found based on, some very unusual volume in this particular stock, Tyler.
All right. Thanks, Matt. Yeah, so we'll looking forward to seeing how that goes next week. Yeah, so as always, if you have any questions about our tools, you can email us at support@orats.com. And all of our tools, you can find more details on them on orats.com. And thank you very much to Tradier for hosting us on your show. And we'll see you guys again next week.